All right, so you're ready to crack open this PepsiCo earnings call, huh?
Yeah, let's do it.
Maybe you're prepping for a meeting, maybe you're an investor, or maybe you just really love your snacks and
The
drinks.
important stuff,
Yeah,
the essentials.
exactly. Either way, we're doing a deep dive into their Q3 2024 earnings call. And trust me, there's more to unpack here than a bag of like Doritos, Locos, Tacos flavored Doritos.
Which is saying something.
Oh, yeah.
There's a lot going on. We're really seeing a company and, frankly, a whole economy trying to navigate some choppy waters.
Okay.
The headline news is that PepsiCo adjusted their organic revenue growth forecast for 2024, dropping it from 4% to low single digits.
Okay.
Now, that might sound like a bunch of jargon,
Mm-hmm.
but organic revenue growth is basically a measure of how much a company is growing from its actual business operations. So a lower forecast. Not exactly the news investors want to hear.
Okay, so let's unpack this whole slowdown situation. What's the deal? Did everyone just suddenly stop craving salty snacks?
Well, it's more nuanced than that. Remember those crazy grocery bills we were all dealing with?
Oh, yeah.
Turns out inflation is cooling down, which is good news overall. But here's the catch. Even though prices are stabilizing, the average U.S. consumer is still feeling cautious. They're not quite ready to loosen the purse strings just yet.
So it's like we're all a little shell-shocked from the economic roller coaster of the past few years.
Precisely. And it shows in those everyday purchasing decisions, like choosing the store brand chips over the name brand, or maybe skipping that extra bottle of soda.
It's interesting how those like seemingly small choices at the checkout can actually reveal much larger economic trends.
Absolutely. And it's not just a U.S. thing either. PepsiCo specifically mentioned global uncertainty, with geopolitical tensions putting a damper on their international business. They're estimating a 0.5% hit to their overall revenue. Now, that might sound small, but for a multinational company like PepsiCo,
Right.
it adds up.
Yeah, it really highlights how interconnected our world is. Any instability anywhere can send ripples through the global economy.
Exactly. And for a company with a global footprint like PepsiCo, navigating these external factors is paramount. But here's where things get really interesting. How is a brand like Frito-Lay, which is known for its iconic snacks, adapting to this new landscape?
Now that's what I'm talking about. Everyone wants to know how Frito-Lay is holding up. I mean, they've been on a roll for years, but even snack empires have to adjust, right?
This is where we start to see PepsiCo's strategic muscle flexing. They're not just trying to weather the storm, they're trying to find opportunity within it.
I love that. Turning a challenge into a chance to innovate. So what's the game plan? Are we going to see fire sale prices on all of our favorite chips?
Hold your horses.
Yeah.
It's not quite that dramatic. PepsiCo's playing a clever game, balancing short-term wins with long-term strategy shifts.
Okay, I'm intrigued. Let's break it down. What's the first move?
First, they're doubling down on value. Remember those Lay's promotions over the summer, like those bonus packs and like 20% more bags?
Oh, yeah. I definitely stocked up on those. I thought they were just trying to clear out inventory.
Well, it was strategic, and it worked. Lay's saw a 3% increase in household penetration, meaning more people were buying their products. Now, they're planning to roll out similar promotions for Doritos and Tostitos as we head into the holiday season. It's all about easing the pain at the checkout, especially when people are buying for parties and gatherings.
Smart move. Everyone loves a good deal, especially when you're on a budget. But let's talk about those of us who are trying to eat a little healthier. Are we being left out in the cold?
Not at all. This is where PepsiCo's positive choice portfolio comes in. They're trying to make healthier options more accessible without pricing themselves out of the market.
It is a tough balance.
Right.
Because even health-conscious consumers are feeling the squeeze these days. You can't exactly ignore grocery bills, even if you're all about that kale smoothie life.
Exactly. So PepsiCo is strategically putting more weight behind brands like Sun Chips, their Simply line, Smart Food, Popcorners. They're even hinting at a potential acquisition of C8, which, let me tell you, makes some fantastic chips and dips.
Siete is delicious. I've tried their stuff. That would be a brilliant addition to the PepsiCo family. But it's not enough to just have these healthier options, right? You've got to get them in front of people.
You're spot on. Distribution is key. PepsiCo knows that simply having these products on the shelves isn't enough. They need to make them more visible and easier to find in stores.
It's about meeting consumers where they are, not making them hunt down a healthier option. But this focus on value makes sense in the short term. I'm curious, what's PepsiCo's long game in the snacking world?
That's the million-dollar question, and it brings us to two major trends that PepsiCo is betting on. The first is the demand for what they call permissible snacks. Think lower sodium, lower fat, basically snacks that let you indulge without totally derailing your health goals.
Because let's be honest, we want it all. We want the crunch, the flavor, the satisfaction, but maybe with a little less guilt on the side.
Exactly. And the second big trend is the rise of mini meals. Snacking isn't just about chips and dips anymore. It's about replacing traditional meals with smaller bites throughout the day.
Oh, I'm all over this trend.
Yeah,
It's all about convenience, portion control, fitting into a busy lifestyle. And doesn't this tie in perfectly with that potential Siete acquisition we were talking about?
totally.
I mean, hummus with Tostitos. That's a mini meal dream team right there.
You've hit the nail on the head. This shift towards mini meals is huge, especially with Gen Z and millennials, and PepsiCo is strategically positioning itself to capitalize on it. But it's not just about snacks. This earnings call gave us a glimpse into how PepsiCo is maneuvering through a whole lot more, from beverages to the global market.
Well, I'm hooked. Let's dive into those other areas. What's the story with the rest of the PepsiCo empire?
All right, so we've talked a lot about how Frito-Lay is adapting to this new economic landscape, but PepsiCo is a global company. So what's the view like from their international markets?
It's a bit of a mixed bag, actually.
Okay.
Some regions are booming while others are facing some headwinds.
Okay, let's break it down. Where are the bright spots?
Southeast Asia and India are looking really strong right now.
Okay.
They're seeing solid growth driven by a growing middle class and increasing demand for snacks and beverages.
So it's like they're catching the same wave that Frito-Lay rode in the U.S. for all those years.
Exactly. But then you have places like China where consumers are being more cautious, which is impacting PepsiCo's sales there.
That makes sense. We've been hearing a lot about economic slowdowns in China. Right, and it's not just China. Mexico is facing some political and economic headwinds as well, which is impacting PepsiCo's business there. And of course, the ongoing geopolitical situation is creating uncertainty in places like Europe and the Middle East.
Yeah, it's a good reminder that PepsiCo isn't just selling to Americans. They're a truly global company with exposure to all sorts of economic and political factors.
Mm.
They're juggling a lot of different variables.
They are. But speaking of juggling, it seems like their beverage business is holding up a bit better than snacks, at least globally.
Really? Even with all the talk about healthier choices these days.
It's fascinating, isn't it?
Mm-hmm.
It seems like those sugary drinks are pretty resilient, even in the face of economic uncertainty.
Why do you think that is?
Well, there's probably a bit of psychology at play. People turn to familiar brands and products for comfort during tough times. Plus, let's be honest, sometimes you just need a little indulgence, and a soda or a juice drink can provide that.
It's like that saying, when in doubt, eat a cookie.
Right,
Or, in this case, drink a soda.
exactly. But beyond the psychology, there's also the fact that beverages tend to be more recession-proof in general. People might cut back on restaurant meals or expensive snacks, but they're less likely to give up their daily soda or coffee.
So PepsiCo's beverage business is providing a nice counterbalance to the slowdown in snack sales.
Right.
It's like they have a diversified portfolio of deliciousness.
I like that. And it speaks to their overall strategy. They're not putting all their eggs in one basket. They have a diverse range of products and brands, which gives them flexibility and resilience in the face of changing market conditions. But it does raise an important question about their margins.
Right, because we talked about Frito-Lay potentially feeling the squeeze as they invest in value and innovation.
Yeah.
So how is PepsiCo managing their margins overall?
It's a balancing act, for sure. On the one hand, they're facing higher costs for ingredients, packaging, and transportation, which puts pressure on their profits. But on the other hand, they're laser-focused on improving efficiency and finding ways to do more with less.
So less about raising prices and more about streamlining operations.
Precisely. They're investing in technology, optimizing their supply chain, and really scrutinizing every aspect of their business to find cost savings. They're also banking on continued growth in those international markets we were talking about, like Southeast Asia and India.
It's like they're playing a game of chess, strategically moving their pieces around the board to maximize their position.
That's a great analogy. And it highlights the complexity of what they're doing. They have to think several steps ahead, anticipating challenges and opportunities in a constantly changing global market.
So we've covered a lot of ground here, from value-price snacks to global market dynamics. What does this all mean for PepsiCo and, frankly, for all of us as consumers? What should we be taking away from this earnings call? So we've talked about PepsiCo's strategy, their challenges, and their opportunities. What's the big picture takeaway here?
This earnings call, it wasn't just about numbers, it was a glimpse into a company and an economy in transition. Like we're seeing a pretty fundamental shift in consumer behavior driven by, well, economic uncertainty and changing tastes and all that.
Yeah, it's like we're all adjusting to a new normal, and PepsiCo is trying to adjust right along with us.
Exactly. And I think that's the key takeaway here. PepsiCo isn't shying away from these shifts. They're leaning into them, adapting their strategies to meet the, evolving needs of consumers.
It's almost like they're trying to ride a wave rather than fight against the current.
There's a great way to put it. But it does kind of beg the question, will these short-term adjustments be enough to ensure long-term growth? Or are we witnessing a more fundamental reshaping of the entire snack and beverage industry?
That's the million-dollar question, isn't it? What do you think? Are we on the verge of a snacking revolution?
It's certainly possible. I think this earnings call highlighted a few key things to watch. First, keep an eye on those margins. Can PepsiCo continue to expand its profitability while also investing in value and innovation?
Right.
That's a tough needle to thread.
Especially in an environment where costs seem to be rising for everything.
Exactly. And second, keep an eye on those international markets. Will those emerging markets continue to grow and offset some of the slowdowns elsewhere?
And what about the consumer? Will we see a continued shift toward healthier options, or will people revert to old habits as the economy stabilizes?
Yeah, these are all questions that'll be really interesting to follow in the coming months. But I think the most important thing for our listener to remember is that this isn't just about PepsiCo. This is about all of us as consumers and how we're navigating this new economic reality.
That's a great point. We're all part of this giant economic ecosystem, and our choices have ripple effects.
Precisely. And as consumers, we have more power than we realize. Our purchasing decisions, they send signals to companies like PepsiCo influencing what products they create, how they price them, where they sell them.
So what can our listener do? Should we all be analyzing earnings calls and studying market trends?
You don't have to be an economist to make a difference. Simply being aware of these trends, thinking critically about your own consumption habits, and supporting companies that align with your values, that can make a big impact.
That's a refreshing thought. You don't have to be an expert to be an informed and engaged consumer.
Exactly. And sometimes asking the right questions is more important than having all the answers. This deep dive has given us a lot to consider, wouldn't you say?
Absolutely. We've explored the inner workings of a global company, uncovered hidden trends, and hopefully sparked some curiosity in our listener. And isn't that what the deep dive is all about?
It is. It's about going beyond the headlines, digging into the details, and empowering ourselves with knowledge.
Because in a world that's just saturated with information, it's not just about what you know, it's about knowing what questions to ask. And on that note, we'll leave you with one final thought.
Yeah, the next time you're strolling down the snack aisle, take a moment to consider the forces at play. The products on those shelves, they tell a story. A story about economics, consumer behavior, and that delicate balance between supply and demand. Who knows? You might just uncover a few surprising insights of your own.
Thanks for joining us for the deep dive. We'll catch you next time.